So we'll move to section 2, wherein we'll look into the uh, underneath strength or underneath data, wherein we would see what all things are happening within the market. So we can see that, yeah. So ADX, right? So one strong indication that we got, and we discussed about this in last week's meeting also, that the ADX has been flattening around 41 level, right? And it has been flattening, and we are seeing that the negative DI, right? Negative DIs or negative directional index has been slowing down, and right now the positive DI has taken over, and it is ramping up nicely, and that has led to further weakening of the downtrend. And this is what we are seeing in the index also, right? So it's a derivative of price ultimately. So ultimately we are confirming with respect to ADX also, right? So fall through day with a very high volume is intact. It has recovered above its key moving average. So this is a very nice sign to be in, like positive or green signal we are seeing with respect to the moving average. And thereafter, distribution day count has declined drastically, which was around 9. And right now it is standing around 5. So a drastic reduction in distribution day count has happened. Along with that, the best thing is the India VIX has declined substantially from a level of 26, 28, I would say, 27.9. So from a level of 28, it has declined substantially to a level of 18.9, around 19. So that's a very good scenario. And the number of stocks in stage 2 have recovered massively. So from the lows, right, around 57 it made recently, it recovered to 148, almost a 3 times kind of increase. And day by day, we are seeing a good increase in here. So that's a very good sign. We'll move forward to the right hand side and we'll try to see what all things are happening there. So if you look into the right hand side, right? So one great indication that I'm waiting for eagerly is BAM, right? So as I told you, I think in last few weeks, that this indicator is such a great indicator that has never ever given a bad signal. I mean, it's kind of 98 to 99% accurate when it gives a nice BAM signal that reminds you that the market has reversed and the trend has reversed, right? So in this case, what I'm waiting for, I'm waiting for the BAM to cross, I think 1.8 or 1.85, something around that. I have kept the threshold. But right now, if you could see, the BAM is currently around 1.65. So prior to that day, it was around 1.6. From 1.61 to 1.65, it is standing there. Seems like it is flattening, but I think if a further up move happens or further push happens in the Nifty, which pushes it toward the 50 DMA, right? As we have seen in the chart. So BAM might hit 1.8. That is what I'm hoping for. And if that happens, that's a very good signal. Okay. So this is what I am waiting for in next 3 to 5 days. I would say next 3 days itself. And if you move to the right hand side, now this is a great sign, right? As we have discussed at new 52-week highs, making it is significantly higher now beyond the 52-week lows that are happening, right? So 48, 39, 31, and 5, right? So it has turned positive, but the caveat is it's kind of extended market as of now, because as you can see that 10 DMA percentage of stocks above 10 DMA is 98%. So 98% of the stock in the market are above their 10 DMA. 91% of the stocks in the market right now is above their 21 EMA. 60% of the stocks are above 50 DMA, and rest all okay, right? 33% and 21%. And again, the extended ones are RSI 50, right? 87% of the stocks are above RSI 50, and above the MACD threshold 96%. So somewhere I feel that with the recent move that has happened, right, it's kind of topping out is what I can say with respect to the sharp up move that has happened from the bottom. And I feel that based on all of these, there might be a constellation, and if that happens, then there is a high possibility of a gap partial fill up or a complete fill up to happen, right? That would be a great scenario. Okay, 23,000 something, which I have already mentioned, 23,100 something. So that is the level one should look out for, right? So this concludes the section 2 of our discussion.